Greetings, Algo Artisans. It's Cowboy Friday, 8:30 AM EST. We're going to start the live show right now. Looks like the bullish thesis on Bitcoin that I mapped out a couple of days ago is playing out. So let me go ahead and share the screen. I know yesterday I did a fair amount of the show without even sharing the screen, which was bonehead move. We're not going to make that mistake today. All right, here we go. And let me make this a little larger and a little less messy. So this is the Head and Shoulders going back several weeks, going back to April 17th. So a month. It's a month-long head and shoulders longer that formed up at the bottom of this range. And it's a beautiful one. I'm going to go ahead to a higher time frame so we can look at this in a little more clean of a manner. So this is on the daily chart, right? Big, massive head and shoulders, comprising about half of this consolidation on Bitcoin going back to really to March, going back 2 months. And price did dip down in this head and shoulders out of the consolidation to grab liquidity at 56,500. For the moment, that is looking like it will be the bottom. And as I painted 2 days ago, it looks as if price is going to continue up, at least where it is now, halfway, half of this consolidation. A decent trade on this, actually. If, I might be interested in taking this trade myself. When this breaks out here, let's do... we're seeing a little bit of kind of a mini range being created. If you look at the current price action, and we'll zoom out. We'll zoom in to take a better look at the price action here. But essentially, you're looking at a little back and forth, and that's between 64.5 and 63.5. Did I say that right? That's not right. 64.5 and 66.5. Okay, sorry about that. So price may break upward from that. And right now, if I had to guess, I would say that's going to happen for multiple reasons. We got algos pointing that direction. We've got, this head and shoulders very clearly pointing that direction. And, I drew this line just a couple days ago, and it looks as if price is continuing along this thesis. A higher target for this head and shoulders in and of itself is about halfway between the midpoint of this broader range and the top of that range, right? So that's the 618 extension based on a Fibonacci from the neckline. And I drew that just a couple days ago. And I know that's a lot of tech talk, but if you're with Algo Factory, you definitely understand the stuff that I'm talking about. We got Finding Durham in the audience. Good morning, Finding Durham, the Sasquatch. But yeah, this is a likely look. Even if I was just simply to consider taking along as a breakout of this consolidation, that would be a nice long. What would that look like? Let's see. And by the way, this line up here, this yellow line, that first target, that's the 1272 Fibonacci. The actual the golden ratio Fibonacci extension is right at the top of this entire consolidation. So I'll redraw that because I think I may have deleted it to make things look a little more clean. So let's do it this way. Okay, so the way that a head and shoulders target is measured, right, is you go from the apex of the head like this, and you draw a line to the neckline. And that is the line on which you draw your Fibonacci tool. So I would kind of move out a little bit, either to the right or the left, and I would start the Fibonacci tool, and I would run it up to that spot that is directly above the apex of the head on the neckline. And when you do that, you'll see that you get this target up here, this Fibonacci extension, the 1.272 and the 1.618. Now, I didn't use an extension tool. I turned my Fibonacci retracement tool into an extension tool. That's why you see negative 0.272, negative 0.618. It just makes life easier for me to do it that way. I don't have to push as many buttons. That's just a shortcut, and it works to the upside and it works to the downside. You can see the 1.2 and the 1.618. So that's, if you're confused, that's just a kind of a hack that I use. But long story short, you got the 618 right at the top of this. There's a very decent probability we're going to see price go up there. Now, it could, of course, reach down and grab some liquidity. Yesterday, we had liquidity down at these yellow lines. So this 63.5 and 64.4, that's where liquidity was on the Kingfisher yesterday. And we're going to take a look at that very shortly to see if it is in fact still there and whether or not price may jump down to grab that. Now, the rule that I follow and I show people at Algo Factory is that, give me 1 second here. The rule is that the algos have to call for a move up, first of all, to even consider whatever liquidity is on the chart. And let me change this yellow to blue for my own coding purposes. That blue means target, right? As opposed to yellow meaning liquidity. That's generally how I code things, right? So that's my own, I guess you can use the term nomenclature. In this case, though, let's go over to the Kingfisher and let's have a new liquidity map broken out. Now, I use Kingfisher. It's a great site. I haven't been using it to its full extent, near its full extent. You know, there are times when I have a subscription to it and I'm using like all the options information on there. Right now, I'm just getting liquidity. Okay. And liquidity, you can actually get free credits and do this. You don't even have to have a subscription, but I would recommend actually exploring their options because this is a very powerful website. And there is a referral link in the descriptions. Check that out. 63.6 and 64.5. So let's see if that's where things still are. 63. We'll move this up a hair. 63.6 and 64.5. So these moved just a little bit. And I'm putting these where the concentrated amount of liquidity is, right? So that's that. We got a little bit of an overlap here. Let's bring this to the front. Okay, good. So these yellow lines are where price might dip to. However, the algos, at least high time frame, are not calling for this. On the this is like the daily chart. Now, price could dip down and grab that, but right now it doesn't look like it's gonna. And if price breaks above this consolidation, I'm gonna look at a trade. So let's go to a lower time frame to see what that trade might look like. We're on the daily. I'm going to move it down to the 3 hour, on which the algos are still pretty bullish. So just based on the algos and where liquidity is, now there is a decent chance price could dive down, grab this 64.5 because that liquidity is there and it's right at the bottom of this consolidation. So we do have to understand that's possible. And this consolidation is not that well defined. We only really have 2 touches at the top. Price may never make it back down here. So, but there is always that chance that it would. So I do have to account for that in my stop loss. Normally, you know, if I were to like take a trade while price was inside of this consolidation, my stop loss would be below that liquidity, right? Because price wants to dive down to grab that liquidity. Doesn't mean it will, it just means it wants to. So what I would also do is if price broke above the top of this box, in fact, I would have, I'd say that's my area of interest is to be safe. It's going to need to break and close above the top of this candle right here. This is not a very well-defined range. It's almost a proto range, as a matter of fact, because like I said, I need 2 touches on the bottom to really say that it's a range. So I'm just going to go with a high basically, right? I'm not going to really say this is a range just yet. My rules are not met, but I can tell you this is what it looks like it's doing. So if price breaks above this high, whether you want to call that a range or not, that high is 66,769 over on KuCoin. It's going to be pretty much the same across the board. And I would look to go ahead and long that. Now, the risk on this is if that liquidity towards the downside is still there, if there's rejection, it's going to go grab that. But you might consider, you know, how to do your stop. It's going to be up to you. Could split it between 2 different stops, but my trade looks something like this. And I would probably use some of this liquidity down here as protection for my stop. And then I might split the difference and put a second trade on with a stop loss a little bit deeper. Again, the ideal situation on this is that if price dove down to grab the liquidity at the bottom of this proto range, again, it's not a defined range yet for me, But if price grabbed liquidity right there and all the rest of the algos still supported the trade, then I would, while below this, I know this is kind of a little more risky, but while below this top of 66.7, I still would grab that long as the algos said that I could do it, because I've tested this and I know that can work for me. And now you're looking at a great trade. And again, this is sort of a, you're grabbing a trade above the midpoint of this larger consolidation. So, there is that aspect that also makes this make a little more sense, right? So that's what the trade would look like if there was a grab to the downside. And if price did grab that downside and break up, I might add on and build a position right up here at that breakout. And then I would not, the liquidity at that point would theoretically be gone. So the only liquidity I'd be concerned about is anything that is below this breakout. And then my stop loss would incorporate that data, whatever it would be at the time, plus whatever, structure was built inside of this. And again, these are trades that are about a 3-to-1. 3-to-1 or better. This one from the bottom is a 5-to-1. This one on the top, as of this theoretical, is about 4-to-1. It could end up being like a 2.5-to-1. It just depends on what happens at that time. So this whole thing is, definitely, this is a good plan. This is my plan. And this is kind of stuff we do over at Algo Factory. So, we teach this kind of thing at Algo Factory. Like right now, for the next hour or so, next 50 minutes, I'm going to answer any questions people have over in the private live lab. And basically, people will say, hey, what do you think of this coin? What do you think of that coin? Excuse me. And I'll do custom charting. And if I feel that there is a trade to be had, then I would map that out. We also teach people how to build their own trading algorithm. And a lot of people think that algorithms involve like knowing how to code and you build an auto trader and you walk away, and that can be true. We can help put you on the path to having that, okay, to where you can build an algo that trades for you. I have a couple. So it's very, it can be done. But in order to do that, at least through our program, I build those manually first and I test them manually, because using PineScript and their auto tester, it's just not that good on TradingView. And TradingView is a great, I love TradingView. Like, I don't trade anywhere else. I use MetaTrader, but I bridge from TradingView over to MetaTrader. So I'm not throwing shade at TradingView, but just their automatic backtester does have some development that it needs to undergo. And besides that, as I manually backtest, that helps my creative process. And you just got to go through the work. And when you do that, you will build a trading plan that is your own. And because it's your trading plan and you've built it and you've tested it, then there's a much higher chance for you to be successful trading, because that's yours. That's your baby. And you put in the work, you know the probabilities, you know the feel. And that actually is kind of the big secret to trading, is when you develop your own trading plan, the psychological component is there. And that right there is one of the necessary components to trading. So definitely come on over to algofactory.tech. You can zap the QR code on the top right-hand side of the screen. In the meantime, we'll say the famous join us.
Join us or die.